I took this trade based on a 2-minute inversion. There's a 1-minute inversion as well, but I took it based on the 2-minute. So let me quickly go back to the other chart. So this red line was the low of the day. This black line was a daily low, probably yesterday's. Let me check. Day before yesterday. So that was Wednesday's daily low. Was taken out, so it got liquidated here, and then we had a 2-minute inversion. So that's the reason why I entered the trade. I entered that as the bar closed, so that's why my entry is a little bit high. I got caught in the momentum, so my entry is a little bit higher. Maybe I could have waited for a little slight one or two pick pull back, and then entered. So my stop ain't really hidden. My stop's like in, you can say, a vulnerable place, but I was taking this trade based on momentum. So if it goes, it goes. If it doesn't, it doesn't. It's what it is, which is actually pulling back. So we might get stopped out. Yeah, we might get stopped out here. Looks like price wants to come back in now. So that's the reasoning for the trade anyway now. So we just need to do this thing. I do think the market's overall bearish. This maybe is just a short-term, possibly a short-term retracement. And then we could possibly see lower prices again throughout the rest of the day, possibly. Just looking at what the daily chart was looking at. And the hourly and the retracements that have seemed to be happening. I could have made my stop a little bit wider, but I'd rather just keep my 5 pip, and then if I stop out, stop out. If it resets up, you know, then possibly we can re-enter. But other than that, I'm happy with the trade I took. It's aggressive, but I thought it might be a momentum trade, which it seems like it's not being at the moment. You know, that we would have sort of got a move on, but it is sort of in a point of resistance, you know, so it could be a place where it holds. Obviously, we want longer prime. Every time I talk, it's just like coming in straight away. So it goes out, I'll be talking, and stopped out, we're done. So we take that on the chin. What's time? It's just 8 o'clock now, the market just opened. So you might want to flush out the lows. That did at the moment. It failed at this at the moment. It seemed to have this fair value gap here seems to have held very well. Tapped into this fair value gap and gone. See, that could be a possible. See this entry, this is like this happens a lot here. Where you'd get this, you know what, it goes either way. That's another possible entry here, yeah? Wait for it to tap back. I see like that happens quite a lot. That could be a strategy for entry. but it doesn't happen all the time. That's the thing. But when you get the momentum, I find when you actually get a daily low taken out, a main daily low, you know, and a prior daily low, you get session daily low and a prior daily low taken out in one go, you know, depending on the time frame and the move that it's made to get there, you might get that short-term retracement, that bounce, you know, which I do like to trade. So I do like to get in there early. If I get an inversion, a nice V-shaped inversion after a liquidation, you know, is really good. It's a good trade. And then we had the see, really and truly, my stop actually should be, like, I should have looked about, my stop should be under the fair value gap. That's at least, maybe it could be safe there. If you look, that fair value, like, price could have just came down, tapped into the bottom of the fair value gap and gone. So that's something I should have noticed as well. I should have been a lot more mindful of that, 100% on this trade. That's definitely something to be mindful of, you know. But whether you get an aggressive entry or not so aggressive entry, it just depends, like, how you feel. And a lot of the time, I'll be waiting for the less aggressive entry, and the aggressive entry just goes, it's gone. Do you know what I mean? A lot of the time. So I think it just depends on how it's setting up, really, and how stacked up the confluences are. You know, you're like, for the trade to work, not your confidence. I could be confident with no found reason when the market can just do whatever it wants, you know. So I'm going to break even in a sec. Once we break over these highs, let's see if we break over these highs, we might come back in. I'm going to break even probably. We'll see. As I said, the market seems to me overall bearish at the moment. Don't know what it's going to do, but it seems bearish. But the areas that we hit and liquidated, usually you get some type of short-term retracement, you know. It just depends how that unfolds, whether it's a quick V shape. When it's like this, pretty quick, if it happens quick V shape recovery after a liquidation event, then usually it can signify lower prices. Like, it can. You know, it's funny because the market depends on what the market's doing. You can have a V shape recovery and it goes bullish. But as I said, the market seems to be, how many pips is that? Done like 7 pips. Should I break even? I break even halfway to target, which is 7.5 pips, sometimes 6 to 7 pips, between 7. If you break even a bit too quick, you will get stopped out a lot. You will get stopped out at break even a lot more. I found that when I broke even at like 1 hour, price would come back a lot to take me out. So around that 7 to 7.5 pips, sometimes I do it about 6, you know. And then when I do it at them ones at about 6, price usually does come all the way back as well. You know, it's maybe that I'm not trusting the trade in what I'm seeing. See how we took out these highs here. But price is pretty strong. So where are we at? 6.57. All right, that's good enough. Let's see if we get one more push and break even. Yeah. All right, we're definitely breaking even now. That's fine. 7.5 half break even. Yeah. Break even trade. Still happy with the trade. Could have got a slightly better entry. That's all. I got in on the momentum. As this bar closed, I pressed it, but you know, as the orders come in on CFDs, you got the spread, which is accounted for. You know, what the brokerage adds on. So there's like 1.2, 1.3 pips that just jump straight on, and then the momentum of that bar opening as I pressed it, you see we ended up, how many pips? That's nearly, let's just say 2 pips. Yeah, it's a 2 pip difference. Ain't that crazy, but still. And if I wait for here, the revert, that's the thing. If you wait for the retrace, you're going to get a lot more better entry. A lot more better entry. Let me just write out my, I need to write out my thing quick. Quickly write out the, make sure we're covering. What am I looking for? Price could fail. Like once you take out this high, where we are, see this gap here, price might come up to this gap. We've got a gap here. The price might want to fill. So that's a good possibility there. And that, for people that were just short as well, that were looking at the market, seeing the market's moving bearish and waiting for a retracement, this could be a possibly good entry. Yeah, sure, possibly. Somewhere, it's a place of interest to look at, you know, if and when the market gets there. All right, let's quickly do this. I'm just quickly do my journal, just write out why I got in this trade. I definitely felt good about that entry. Like I didn't feel, even I could have got a 1-2 pip better entry, but it's a momentum play. Like when you see an inversion like that, V shape, it's a momentum play to me. So it's like you want the momentum to take it. Yeah, my stock could have been a little bit better because I could have easily got liquidated and price went back up. You know, if I'd got liquidated and price came straight back up with a strong top in tail, bottom in tail, like leaving a long wick, yeah, I would have re-entered straight away with a rejection, but I would have just re-entered. Without taking out the trend, just re-entered. Because we know price is still strong. So the only thing is working out, just making sure I get a slightly better entry, waiting for a slightly better entry. You know, that's the only thing that I saw. Other than that, I'm happy with the trade. If it stopped out even if I stopped out, I'd been totally cool with it and it'd gone lower because I know why I got in. We had session low that got liquidated. We had a previous daily low that got liquidated. We had wide ranging bars that pulled down and actually done that liquidation. Yeah. And then I had a 2-minute inversion. Even the 1 minute inversion, what we're seeing here is valid. 1, 2, 3, 4, 5, 5-bar inversion. But I was trading off the 2-minute inversion, which was pretty much a 4-bar inversion, you know. So I just ended there. I was happy with that pretty much, you know, because of the type of momentum that I saw, the type of price action that we were seeing after the liquidation events led me to go long, you know, and have no fear as not fear, but had no indecision, and then be okay. I shouldn't have done this. Shouldn't have. The trade's fine. If I'd lost the trade, fine. That's how it went. You know, entry was fine. It's not going to work 100% every time. You know, all we need is 50% of the time, and we're good. We need even less. I'll do 3 to 1, 5 pip stop, 15 pip gain. Great British Pound USD AM London session. Yeah, like. So I don't even need 50%. I can probably do 30% and still be profitable. I can probably do 35% and still be profitable. Actually, still be profitable. You know, so I just go for that 3 to 1 and just leave it. I break even after halfway. One thing I realized, I cannot stand for price to go like 10 pips and then come all the way back. And not only come all the way back, maybe go all the way back and stop you out. That is just like pain. It's like pain to me. Like, there's less pain in price being up 10 pips, coming down, stopping out and going up. I break even. That's fine. I'm happy with that. I'm all right with that. That doesn't happen as much. It's rare that actually happens. The only time that happens is if I break even a little bit too quick, you know? And it's more of a choppy move. The move ain't really ready yet. I've gotten a bit early before the move's sort of ready to go. Then, yeah, you know, we get stopped out a little bit more on them type of entries. But on these type of momentum trades, we want to get in, especially when we're getting in with a nice inversion after liquidation events. Just get in and take it on the chin, whatever happens. So this is what it is. Whatever happens, I'm at break even. If it takes me at break even, that's the end of the game. I don't take nothing off. I don't do nothing. I just leave it as a 3 to 1 because I don't need to take nothing off. As I said, even if I win 40% of my trades, I'm profitable. Wildly still, you know. So we just leave it to play out, and that's it. I've done my job. My job was to observe the markets and wait for the market to present me an opportunity. And then I set my parameters within that opportunity, and then we allow the market to do its thing. That's what I'm saying. You don't need to win. Like, it's not about winning trades, it's about doing the right thing. You feel better, you feel good. You feel like you're actually carrying out your part. This is work. We're all in the markets, handing each other money. You know, it's one big circle, and if everyone plays it correctly, everyone will get their time to get their money. You understand what I'm saying? You know, but as humans are, we all got different ways of doing things and seeing things, you know. As I said, like, this is overall a short bias, I'm sure. Overall. So we might, like, I could be trading to higher resistance. I could have waited for it to go higher and go for the short, but I could have, but what that depends on is then you sort of catching the correct place where prices can fall. Sometimes it could be a bit, choppy, especially Great British Pound USD likes to mess around. So what I found just now that I saw that trade, it was a more certified entry. Yeah, I was going into maybe a little bit more resistance, but it was a more certified play that I could see, okay, I know that strategy. I know how that works. Like, I'm pretty sure when to get in. We've liquidated two different lows, the session low and the previous daily low, inverted with momentum. It's a no-brainer. Yeah, it's a no-brainer trade. So yeah, the daily, if you look, we've come in and we've opened up below yesterday's after we've rejected from Wednesday. You know, so that already signified lower prices to me. Then I went to the hourly, and at the time the hourly chart was pushing down, was pretty low, pushing down here. But obviously we're liquidating these lows, this low here, and then the session low that was here. So once you liquidate, you're going to get some type of retracement, and we had the gap as well. Like price, this move happened on the London. This happened on the London data release. Yeah, the GDP and a few other things didn't come in too good, so we had a quick sell-off. So because we had some, see even here, see this here, see this 15-minute gap, see this gap here in 15 minutes. Because we've got these gaps here throughout, because price moves pretty fast, price is probably going to want to go and fill them. Look all the way up to the top. Look at this one here. Price will probably come all the way up here and fill out all this and mess about before it finally, eventually chooses to probably go back down again, looking at how price is acting, you know. Really nice, strong, look at this. See this, look at this price action here. Really nice, strong momentum. Showing, like, when you see this, it's showing good momentum. You know, obviously anything can happen, but it's just showing good momentum. Okay, so we're going to liquidate this high on the left here. So we're going to see how that goes. That we might just liquidate it and just sell off and come all the way back. This could be a point of the end, but we have got these, we've got them inefficiencies just above on the left. The price might want to be attracted to. So we just wait for the proper setups, man. See, our price is wanting to sell off. We just liquidated it, just about. So it depends how price feels, to be honest. As I said, it's bearish, so that could be our liquidation point, and then price just wants to start going lower. But what I want to see is a bit more manipulation. It might come here, make another new high, mess about. You know, so it is what it is. You know, as I said, the overall market structure is bearish in it at the end of the day. So I'm taking a trade, which is just liquidated that area. This could be it. This could come all the way back down into my entry now. So I just have to just take it as it is, you see. So we'll see what price wants to do. Might want to do some more manipulation before we actually come down. We'll see. As I said, I'm not worried. I've done my job. I don't really care what it does now. Price can do what it wants. As long as I do my job correctly and end the trade correctly, price can do what it wants. All right, so that's enough commentary for me. Obviously, this is for journaling purposes as well, for my personal self. I do rewatch my videos. I was listening to something. Let me put it back on.
Of streams of thought to simply hijack your mind and take you to wherever they are going. In trading, mindlessness leads to poor trading results. With applied mindfulness training specifically for traders, the trader becomes a witness to his internal thoughts rather than a blind victim to them. This thinking that you have become mindful of can now be examined. What you learn in the development of mindfulness is that you and your thoughts are not the same. In fact, a more powerful question arises. Where do these thoughts come from? We trade our psychology, our unseen biases and beliefs. In the detached, calm, assertive nature of mindfulness, we come to realize that thoughts are manifestations of our deepest beliefs and biases about ourselves, our worth, our inadequacy, and our power to influence the world. It is this core material that we have to reorganize to become a peak performance trader. Most of us, traders included, avoid this necessary internal inspection of ourselves and our deepest beliefs about who we are in the world. It causes short-term discomfort. So our biology triggers us automatically to avoid that discomfort, the threat. It is all exposed in trading, though. In fact, it is inescapable. In trading, there is no place to hide for long from our deepest fears. They manifest in the conversations, our thoughts, while in the midst of trading decisions. Until we develop the emotional intelligence to face our fears and learn from them, the trader that we are will continue to produce mediocrity and draw downs to his or her trading account. By calming the fear to a tolerable level, the trader can approach his or her own personal demons that keep him or her from organizing into a peak performance trader. In mindfulness, we learn to separate historical beliefs that we were born into. A powerful possibility occurs here. Freed from the power of our fears, we can rediscover much more powerful meaning and purpose in our lives. And from this deeper sense of self, we have the discipline, the patience, the confidence, the impartiality, and the courage to change ourselves and become the peak performance trader living within us. This aspect of developing a trader state of mind can be also called the reinvention of the self or the reorganization of the self. Emotional regulation leads the trader to stability where he can sit with his fears and resolve them rather than avoiding them. In applied mindfulness training, the trader develops the skill of separating his identity from the
Oh,
self.
what about hit target?
With further development, the trader begins to
Target. Come on, one more push. We're definitely going to push though. Take out these high, this next high. Could be it. See this bar, look at that, it looks over. See that finished? Top, close, down. Could be over, man. We actually close this gap right here as well, the top of the gap above it. So that might have been it, man. Let's see if we get one more push. You can give us one more little push. Come on, liquidate this next little high. It's come all the way up here, but it could just stop at these fair value gaps. Boom, target, there we go. All right, then that's it. That's cool. Win, lose, or draw, at least we take the correct trade. And that's all that matters, you know? So that we're done for today. Done. We give thanks. Give thanks for taking, give thanks for the process. The win, the loss, the draw don't really matter. It's just a process of being able to do the correct thing and allow it to play out over and over and over again. that's what the give thanks is for, really. You know, the win is just part of the numbers. The loss is just part of the numbers. The break even is just part of the numbers. You know. So now the market is probably might prepare to go short now. So for people that were looking short, the market probably get to that now. See it inverting now. See the re-inversion that's happening. 1, 2, 3, 4, 5, 6. Let me see on my other chart what that inversion looks like on the 2 minute. So if this inverts here on the 2 minute, possibly get short a lot lower prices now. I ain't taking no more trades. I'm done. Just want to see how what it does now. Just read the market for a bit. As I said, I was initially bearish, and now we see the market wanting to go lower after retracement. So I want to see some manipulation. It's 2 minutes for engulf, and it's got 1 more minute to re-engulf, to re-invert. This is a really nice. All right, it didn't invert. It didn't invert yet, and then 1, 2, 3, 4. It still didn't invert. I just want to see how price plays out if I was waiting for the short. If I was waiting for a retracement, if I was only looking short, what would that look like? If it had looked like anything. Let's watch and see what the market does.
when I was painting the door here. The paint went in the peephole, and I used a scrubber to scrub it off. But for the people, because the scratches on it, do you know what? Take off the scratch off of it.
No, you just glass.
And what I can use.
Glass or plastic. Scratch it. Right, anyway, I'm going to keep watching on the stream. We're back this afternoon, trading the S&P 500 for the US session.